Boom shakalaka, shocking connections between SBF and the SEC, plus the worst market in history, and the one chart worth sticking around for. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video we're talking about a lot, including some very interesting connections that came out there, why this market stinks so gosh darn bad, and one chart that just might give you a little bit of a happy ending. Before we get into it, guys, make sure to like, subscribe, click the notification bell. Come join us on Twitter at @TheCryptoLove. Push that like button. And today, Extreme Fear 24 up from yesterday, just a hair. The entire market's sideways today. Bitcoin at 16,864, Ethereum at 1267, BNB at 283, XRP 35 cents, Dogecoin 8 cents, Cardano 33 cents, and Polygon 95 cents. And Bitcoin right now still sitting above the previous downtrend that we broke through in October. Can we hold this? I don't know. But I came across this today. This was actually tweeted by Elon Musk himself, I believe. And he says, Sam Bankman-Fried, CEO of FTX and MIT graduate. He dated Caroline Ellison, CEO of Alameda, dated Bankman-Fried, and daughter of Glenn Ellison. Glenn Ellison, professor of economics at MIT, former boss of Gary Gensler. Gary Gensler, head of SEC, former professor at MIT. Could any of these people be going to jail? I don't know. It's all allegations. So none of that but true. But we're not talking about that today because this is exciting. Guys, the worst market ever. I thought it was the worst market in 85 years, but this is the worst market ever. The worst performance of the market in over a century in real terms since 1872. If we take a look at the S&P real total returns, compare this. This is worse than 2008. This is worse than September 11th .com bubble. This is worse than the oil shock post-World War II, Great Depression, World War I, or Panic of 1907, even the Great, when everything collapsed, the Great Depression. So worse than all of that, and yet we're still in it. We are still kicking, but it looks like things might be turning around because it appears like it's game over for DXY. DXY broke the parabola. It found resistance where a lot of people were talking about where it would, and it's headed back down. Now, why is this important? It turns out that the dollar is a big influencer of Bitcoin's behavior. So this is a standardized regression coefficients of 6-month changes in Bitcoin price by corresponding changes in the S&P 500 and the US dollar. Based on this, when the S&P goes up, Bitcoin goes up. When the dollar goes up, Bitcoin goes down. Consequently, when the dollar goes down, as we're seeing it start to do on this chart, well, Bitcoin goes up. That could be very, very good news for Bitcoin. Now, right now, on the Bitcoin Power Law corridor, Bitcoin is at the last resort support to this indicator. Imagine Bitcoin bouncing up from it in the upcoming weeks and close above the purple line. Would be a sight to be seen. Now, this has happened a few times before. COVID bottom. We had the bottom in 2019, bottom in 2015. So could it happen again? Certainly. And you definitely want to stay tuned to find out exactly why. But right now, the volume profile and price very comparable to what happened in 2013 to 2015. We had a double bottom below POC of the volume profile. Look at this. We had a double bottom below POC of the volume profile. What happened in 2015 is after that, an explosion in price once we got above that POC. Could we have the same thing happen? An explosion after we get back above the POC? Certainly. On macro cycles, the accumulation zone finally started according to the macro cycles indicator. Past 2 cycles, Bitcoin dipped below the green line. If Bitcoin were to repeat previous cycles, it would drop even lower in price. So we could see it going even lower than this, which right now is at $14,000. This would definitely make a lot of people happy, people who have been talking about $13,000 or $10,000. But despite where the price is going to go, because nobody can predict that, afterwards everybody's going to be claiming, yes, I called that price. But nobody can say with 100% certainty where the price is going to go. In the long run, it was never a bad idea to invest in Bitcoin when the premium stochastic oscillator was in the red area for a long period of time. We've been in this red area for a long period of time. Historically, these have been great areas to pick up Bitcoin. Same thing holds true today. Great area to pick up Bitcoin, even if the price goes down, because there's really not that much further it can go. Knock on wood. But Bitcoin and large bear markets have shown plasticity of price movements in relation to market capitalization. We can state the following: the larger the market cap, the smaller the correction from the all-time high. Currently, we're at a ratio of 4.1, and we can see this right here. It has decreased in each cycle. We saw 96% down, 86% down, 84% down, potentially only 77 or so percent down. But this is a very, very interesting chart suggesting that perhaps the distribution may be complete. Now, distribution is basically Bitcoin moving hands between parties. At the beginning of 2021, you can see the black line all the way up here. There was an overhang to larger entities, 1 to 10,000 Bitcoin in the observed cohort. Since then, the relationship has normalized. Coins have been distributed to smaller entities. You can see that pretty much marked the top right there, and then it just went down and down and down from there. We were back into the level that generally marks bottoms. So could distribution be complete? Certainly could. As a matter of fact, looking at these hardy, crazy efforts, following Bitcoin for over 6 months and literally unchanged in their supply, despite an end-of-world collapse happening around them. Whoever owns this stupid thing must be batshit insane or have immense conviction undeterred by chaos. Yes, that's right. If you're still holding Bitcoin, it definitely must be batshit insane or undeterred by chaos. However, it is worth noting that each time that these HODL waves have turned over, that has marked the bottom. Turned over, marked the bottom. We have not yet turned over, but I could be convinced that it looks like we're getting pretty darn close, which brings us to the one chart that I think is very much worth looking at. Pricing at the halving is historically at fair value. Assuming fair value doesn't move much lower, that would mean about $40,000 in 18 months. That's right, you heard me. Bitcoin right now trading at $16,000. Fair value at the halving is $40,000. Well, that sounds like a discount to me. But, you know, I'm just a little bit batshit crazy because I'm still holding some. So that's all for today's video. If you did enjoy it, push that like button. I'll catch you guys later. Have a good one. Peace.